Hello. Good afternoon.
No.
You know what? That was weird. You spoke before I said you would accept it. I got a bit confused then.
Yeah.
Jesse to the conversation, and then we can crack on with today's Friday fix. Hello, Tom. So welcome everyone. Good morning, good afternoon, good evening, whatever time of day it is, wherever you are in the world. As just mentioned, this is obviously the Friday fix with myself, Ryan Paisley, and the awesome team at AlphaPicks, Alex and Jess. And a rapid, well, not even a rapid, it's a very good value for money, because obviously you're not paying for it, roundup of the week. So how are you guys? Oh, but hang on, I better do the legals. So before we go on, nothing discussed on the space session constitute trading or investment advice, or if there's any kind of endorsement by PiQ, AlphaPicks, myself, Ryan Paisley, Jesse, or Alex. So how you guys do it? All good?
Yeah, very good. I was going to comment and say it's a beautiful day, but then I actually realised that we usually start off our conversations by talking about the weather, which is the most sort of British way to start a space. But I was like, let's not
And now we're
do
doing it
that
anyway.
today. And then we're doing it anyway. Then we're emphasising the fact.
I got to say that
Is it?
Look, we're British. It's not very often that we get very nice days. Well, that's what it feels like. I'm actually sitting on a nice roof terrace in Islington. So yeah, I know I'm loving the weather today.
Yeah, and talking about British idiosyncrasies, did you see the one? What was it yesterday with Peter Mandelson in the Oval Office doing his little speech about the thing, and then Trump goes and says, "Wow, what a beautiful accent you got there."
Oh,
did you see that?
Really?
Yeah, Trump was enamoured by the British accent. So whatever it takes to get a trade deal over the line.
But this is it, right? Where's your knee pads? Oh,
yeah. But before we come to the UK and US trade deal, I actually thought we'll start with what was kind of last weeky news, but we didn't cover it in the Friday fix because it was on the weekend. The legendary Warren Buffett, who basically last weekend wrapped up his final sort of investor AGM conference for Berkshire Hathaway, saying that he'll retire at the end of the year and hand over the reins to Greg Abel, who's going to look after things.
Yeah.
And it's kind of like, I know sometimes we skim over Buffett and his achievements over the decades because it's a little bit sort of like, investing 101. But I do...
Someone's got to do it, right?
Someone's got to do it, yeah. And I think, this one, which obviously was after the fix last week, so kind of is relevant for this week, is essentially that, what an incredible investor, man, philosophy, mindset he had to essentially, beat the S&P over a continued period of time. And yeah, I mean, Berkshire revenue and earnings, even though they missed expectations, the stock closed on Friday an all-time high.
This is it, right? So like a lot of people, I think just because, everyone loves to be like counter culture and also that. Everyone loves to try and, people trying to be too smart love to shit on Buffett, right? But the fact is, yes, you're right. You can argue that, all he's done is, buy, he's slightly improving on the S&P or whatever, or, the reason he's made so much money, he's kind of been lender of last resort, sometimes buying up companies where they're in ruin because he's had cash in the silo, yada. But he's been in a position to do that. Doesn't matter what he's done. He's been in a position to do that. And so I saw someone again trying to shit on Berkshire Hathaway performance by saying, "Oh, Buffett's not that great. All he's done is bought Apple in 2016. If you take away Apple, he's underperformed the S&P." Well, I was like, "But hang on, but Apple is in the S&P. Yeah, you can't cherry pick like that." But no, I make you right. Hats off to him. Anyone trying to be a little bit too clever and say, "Oh, it's obvious what he did." Well, then do it yourself, mate.
Yes, I mean? Yeah. Go on, Jay.
Well, I was just going to say, I think a lot of what people think of Buffett is kind of the recent years of him just kind of buying and holding like a select few companies. But back in the day, he was a big like merger arb trader, and he's gone across all different areas of the market, and he's got a very broad career, which is very interesting back in the day.
Again, like we just saying, it's like, yeah, okay, the reason he's been very, very successful is because he's had a shit ton of cash on the sidelines that he can deploy when there's blood on the, like he's a genuine like blood on the streets buy property kind of guy. But you know what? Fair play to him, it works. So you can't slag off his strategy because it's worked.
And even this time around, I mean, certainly, last year, for example, when he started to build up his cash pile, which interestingly is end of Q1 hit 347 billion. But it's like, last year when the markets were trending higher and he was building cash, people started to give him some stick even in that scenario. And he was like, I just don't see many attractive valuations, attractive opportunities right now. And lo and behold, obviously, he has then had that cash on the sidelines. And although he was quite sort of tight-lipped on what he'd done in April, which we'll have to wait and see for the 13F filing. But he was been in a great position in April to be sitting on cash and literally take his pick on, if he wanted to add Apple, 20% off the recent highs, then he could have done it. You know what I mean? Yet again, I think it played out.
Exactly that. He puts himself in a position when he's buying and selling on his own terms. And as a trader, that's what you want. You don't want to be forced to do anything. Chances are, if you're getting forced to do a trade, it tends, my experience at least, if I'm being forced to do a trade, it's probably not a great trade.
Yeah, exactly. So anyway, we tip our hats to Mr. Buffett. Wish him very well in his whatever he wants to do.
PiQ's doing if he wants to invest, PiQ's doing a funding round.
Yeah. I mean, 347 billion would go a long way, wouldn't it, in terms of the coffers? Yeah. So it's a rounding error, isn't it? Really, on that figure.
This is it.
Let's go to central banks. Two central banks worthy of discussion this week: the Fed on Wednesday and Bank of England yesterday.
Yeah.
The Fed, I'll be honest, was pretty much a snooze fest. I mean, weren't expecting them to change rates, which obviously they didn't. They were basically like, we're going to be data dependent. We're not in a hurry to adjust the policy rate, et cetera, because of the uncertainty. And the dot plots basically showed no change in the sort of anticipated path. So, not a whole lot going on there. The only thing I would say, which is something we put out on Tuesday ahead of the Fed, was that we feel that the Fed aren't going to cut 3 times this year, which was what was priced pre-Wednesday, just because it's uncertain.
I'm sure when I think again, my brain is mush. Let's be honest. At the best of time, I'm sure tell me if I'm wrong here. A month or so ago, we were talking about what was priced in. I'm sure it was like 4.5 cuts were priced in, and
got to 5.
Yeah. I'm sure. Tell me if I'm wrong here. I'm sure we were saying the market's got this wrong. We shouldn't be pricing in this many cuts.
We were.
We were, right? I'm sure.
Yeah.
And now, so what's it pricing in at the moment?
So at the moment it is at 2.7.
So we got that right. And to be honest, potentially, I think even that's too much. Don't know what you guys think.
Yeah, well, no, so when we spoke about it a month ago, because we put on a trade, the Z5 contract, when it was, basically like 4.5 cuts, thinking that's crazy. If anything, we took profit on it a bit too early, but, that's live. But the play that we like now is actually more in that spread between the December 25 contract and the December 26 contract, because it's kind of like, we don't think 3 cuts. I think it's going to move to 2, just because, the Fed, they're not going to have enough data to move next month in June. Are they going to do July? Just a bit of a whatever. And then all of a sudden, you're probably just looking at 2 in the autumn. But what that will do, if you believe that the US economy is still slowing down and you are going to have these sort of roll through impacts of tariffs, is you're probably going to see cuts just kicked to 26. So at the moment, there's basically 40 basis points of difference from December 25 to December 26. And actually, you could make the case that could easily go to, 60, 70.
Oh, absolutely. Well, as soon as you said that, I was like, hang on, that sounds far too tight. There's no reason why it can't go out to 100 basis points, right?
Yeah, exactly. But the thing is, a month ago, it was at 15 basis points. So literally a month ago, the market was expecting less than 1 cut in the entirety of 2026, which obviously is
from?
So we were on the spread, we were at 37 basis points.
That'd do,
So obviously it's set into 40, which is, take the wins, take those 3 basis points. But we think that's got scope to move.
One thing that I did find quite funny about the Fed's decision, not so much the Fed's, but Trump's reaction, was when, I don't know if you saw it, but Trump gave an interview and he said, Powell's got this completely wrong because obviously Powell said it's what was it? What was it? I can't remember. It's like Trump said it's the opposite of too late to do anything. So I was like, well, no, he said it's the exact opposite to do. It's the exact opposite of too late to do a cut. So I'm like, hang on. So does that mean you saying it's too early to cut? It made no sense.
Well, doing my nonsense sense and bringing it right up to Friday, we're skipping all around the week. Obviously, the headline literally just from the few minutes before we came online that Trump says an 80% tariff on China seems right, which again is just there. Like, I mean, where he's getting these numbers from?
No, this is it. He's making them up as he goes along. I think.
Yeah. But anyway, fresh off the press, Trump is basically saying 80% tariff on China. Skirting back, we'll go Bank of England yesterday, which I would say was definitely the more interesting of the two central bank meetings. And I tell you why it really interested me. I don't know if you noted, but so obviously it was 5-4 in favour of cutting by 25 basis points, which was sort of broadly expected. But two members voted for a 50 basis point cut, and two voted to keep rates on hold. So it's actually quite rare that you get a three-way split in the voting. I thought it was quite interesting. And the added point I'd say on that is that in terms of where the UK goes from here, they said they expect the forecasts show that the US tariffs should shave 0.3% off UK GDP over the next 3 years, which again, I'm not a professional economist, but I think that seems pretty low. I'm pretty sure that, obviously, depending on how things go with the trade deal, UK growth, I think, will be more impacted, maybe not directly from US tariffs, but from the global impact, supply chain issues, yada, yada, yada. I think you could see the UK GDP more impacted than that.
Yeah. This is it, and the thing is, like, it's very easy for people to forget that everything is, the world has never been more connected on this kind of stuff, right? But I make you exactly right. Like, me and Michael Brown were talking in the morning, yesterday morning, about Wednesday morning, whatever day it was. I'm getting confused now. We were talking about, look for what the vote split is, and if you see 7-2, it's going to probably mean, or whatever. Or if you see like 7 votes and 2 against, it's not for keep it unchanged. It's not for a hike. It's going to be to cut 50. And that's what we're kind of saying to people, check the actual data. And then when it came out, what was it? 5, 2, and 2. And I was like, hang on a second, what's going on here? I didn't see for a second even one person voting for unchanged. And that we had 2 people vote for unchanged.
Yeah.
And also, I think it was Michael actually that raised the point where it was the 2 external members voted in different directions, and that's very rare. Well, it's rare that we get three-way split on kind of decisions, voting intentions, but to see the external members disagreeing with each other because they normally vote as a block. It's very. I think it just shows the uncertainty that is in the bank. And do you know what? To be fair, I know again people love shitting on central bankers and stuff, but you can make an argument for, there's so many moving parts right now. It's in the middle of Trump, coming up with trade deals and stuff. Maybe standing pat is a good idea. I don't know. It's an interesting.
Yeah, and I think you could see that in the reaction in sort of assets. I mean, for example, like sterling dollar, it basically spiked on the announcement, and then basically by 5:30. Cable was back down in the 132s where it basically was pre-meeting. So, I think that gives a pretty good indication that the market, is uncertain, but didn't see it as
light there, right?
Yeah.
That's indicative of the market not having a fucking clue what's going on.
Yeah. There we go. Your technical jargon's back in the game. For that for me showed that even though I thought it was a very interesting meeting, again based on those little points you mentioned, but the market basically was unfazed, certainly from sterling and that perspective. And then the other one I wanted to talk about, which I think is a story that I was saying this to Jesse on Wednesday, is that I really don't think it's caught enough people's attention, is the tensions over in India and Pakistan. And Yeah, like it hasn't really garnered that much coverage. Even though yesterday, the Pakistan Stock Exchange, which if it serves me rightly, yes, the KSE 100, it had the largest ever daily decline on record. So exceeding obviously like COVID,
Wait on.
exceeding.
So I don't know what this drop was. Does Jesse know what the drop was? Because this feels like a little bit of a quiz time.
Oh, it does. Yeah, yeah. Let's do points. Should we do point? No, do you want to do percentage or
Oh,
points?
we got to do percentage because I have no idea how many zeros are in that market. Yes, but Jesse,
Yeah.
do you know what the answer to this is?
I don't know it in percentage terms, and also points wise, I would only be guessing.
so no, not a clue would be a no. Right, okay, right. So
percentage is good.
Pakistani stock market, the Karachi stock index, actually might actually be called that. I don't know.
It's K. I mean, let me Google it.
Karachi begins with a K. Give me the win. Right, Jesse, I'll let you go first. Biggest decline ever in the. We're going to call it the Karachi stock.
Just quickly, Alex, are we doing a daily decline or like what it's declined week to date?
That's a good question. Let's do week to date. How much it's down?
Okay.
In percentage terms.
Right.
Hello,
come on.
I'm gonna say.
Anyone there?
Yeah. Can you hear me, Ron? Think lost him. I'm gonna say 15%.
Hello? Have they gone? Is it me on my own? Can anyone hear me?
I'm here. We're here.
Let me. I'll drop him a WhatsApp.
He was here. Okay.
Hello?
Yeah. Oh dear. This is the professionalism of ours. Okay, so actually, do you know what? It's actually rallied back in trading today. So week to date, it's down 6.1%, which it has actually been a bit of a salvage. But yesterday, it fell just over 9%, peak to trough in today. Wow. So 9% move lower, which was, essentially the biggest single day fall it's had on record. So I mean, the story there is that the tensions I think could be spilling over significantly, which obviously has been reflected in the Pakistan Stock Exchange. You've also seen a real spike in dollar INR options.
I'm here. Can you hear me?
Yeah.
Right, I got you. Okay. Right. So did we get an answer on the Karachi stock index?
Yeah, we did. Yeah.
Right. We can still get Ryan's punt.
Yeah, no, I genuinely haven't heard. Right. So what was the question? Right. So the biggest daily drop.
Yeah, let's do that percentage.
Right. Okay. I'm gonna say 12%.
9, just over 9.
Ah.
Yeah.
That's a hell of a drop, though, isn't it?
I mean, it is for the day. But yeah, I was just saying, I think that reflects the severity of how people are viewing it.
Massively.
And I mean, let's not forget these are two, nuclear power countries.
And exactly that, and also, it's people. I think it's very easy for people not to understand the hatred between them. Pakistan and India legitimately, again, another technical term here, absolutely fucking despise each other. We're not going to get into the partition and all stuff like that, because it's not our fault, honestly, Gov. But it's the two nations really, really, there's actual physical hatred to one another, and it's not unforeseeable that a little bit of escalation here, a little bit of escalation here, and all of a sudden someone pushes the wrong button or whatever. I'm not saying for a second there's going to be nuclear war or anything, but we could see prolonged military engagement between the two, and it is one of those situations where I'm a big fan of like this saying where it doesn't matter until it really fucking matters. It's one of those that it's not directly impacting stocks or markets at the moment. But all you need is, God forbid, Pakistan or India to attack the others, another major city in the other country, and all of a sudden that's huge geopolitical risk that's going to enter the market.
Yeah, for sure. And I think it's one of those where, if other countries get sucked in, that's when more of the global markets start to pay attention. I mean, for example, like with Pakistan, interesting piece out that more than 60% of Chinese arms exports went to Pakistan between
Yes.
2020 and 2024. So the Chinese are heavily leaning and aiding Pakistan here.
So
Yeah, go on.
that's brilliant, because that ties in with exactly what I was about to say. Like, this is how complex the geopolitical web is at the moment. China, obviously, President Xi of China was in Moscow yesterday or the day before, whenever it was, with Putin, right? They're best buddies again, right? However, Russia supplies the Indians with arms, and China supplies Pakistan with arms. Yeah, and it's so kind of it's very, very messy. So basically, those two countries, like China and Russia, are funding the two different countries, and they're both pally with opposite countries between India and Pakistan. Yeah, I don't know. It feels like we're not that many steps away from it all falling apart.
Yeah, so that's all I'd say. I'd say it's a story that basically, in my opinion, hasn't got enough attention this week, but I'd say it's definitely one to keep your eye on for incoming weeks, because we could see some big moves there. Wonderful. So that was basically it in terms of what I wanted to cover this week. If anyone else has anything they wanted to shout about.
I want an update on the LNG basket we put together. Are we still outperforming the SPOO?
Yes. That's a good question. Let's have a look. I mean, SP has done pretty well this week. Not
Well,
gonna
this
lie.
is my concern.
So it's hard to have a look.
So for anyone that doesn't know, Jesse put a really good note out a few weeks back about LNG could be a very big benefactor of the tariffs, and obviously where countries are looking to shrink their deficits, and buying US energy is an easy play in our book. And I was very gladly asked if I'd like contribute to the article, which I did. And we've put together a LNG trade basket for people to get involved in. And it was, last time I asked Alex, outperforming the S&P since we put it on. Is it still?
Yeah. So, okay, you ready for this?
Oh, no. I'm going to say no.
It's in the period since you put it on, which basically 16th of April, our LNG basket is up 3.93% as of close yesterday. And the S&P over the same period is it is going to be tight. Let me get this from the 17th. It's no, it's not tight, I'm afraid. It's up 7.3%.
No, God, we were outperforming last week.
We were.
Annoyingly, Trump said buy stocks yesterday. He didn't say buy.
Of course, yeah. This is it. Well, that's
we don't have comfort in chief.
That's gone in the long-term investment drawer then.
I mean, a profit is a profit.
We'll stick with that. Also, I'll scrub this bit when I upload this to the podcast. I'll scrub this bit out.
Yeah, but I mean, hey, look, yeah, LNG is still tasty. Yeah, I mean, that's the thing with the SP. And actually, a very good note to finish on, which a mutual friend of all of ours, Mr. Citrini, James said last year, was that it's easier to show your outperformance when markets are falling and your performance can stay flat versus trying to outperform in a bull market. Because when the market is trending higher, it's very hard to just simply keep up with that. But yeah, when it comes off, or hopefully from like last month when it came off, that's the time when you can show your skill in the quality of stocks that you or other assets that you have in your portfolio.
Yes, exactly that. Awesome.
Good.
That's a good note to finish on. Shout out to our good friend James Citrini. Jay, anything left from you, or we covered?
No, I think we're covered.
Awesome. Well, guys, thank you as always for being your awesome selves. I know I always say it, but anyone listening to this, if you don't already subscribe to the AlphaPicks lads, their Substack, do so. Make sure you follow them as well. The content they put out is always exceptional, even when they get me to get me crayons out and add something to it. But listeners, you guys, I hope everyone has a fantastic weekend, and we'll see you all next week. Take care. Much love.
Thanks, guys.